Markets continue to push higher, supported by strong corporate earnings, but the geopolitical backdrop is getting more complex. My name is Colin Bernd, financial advisor at Advent Partners, here to provide this week's market commentary. The dominant story remains AI and semiconductors. The scale of the move we have seen recently is difficult to overstate. Chip-related names and AI-adjacent stocks have delivered extraordinary returns in a very short period. SanDisk is up roughly 500% year-to-date, and Intel has surged over 239%. Samsung recently crossed a $1 trillion market cap, and the semiconductor index as a whole just posted its strongest week since early 2000. However, that strength is becoming increasingly concentrated. When leadership narrows to a single theme or industry, markets can become vulnerable to sharp reversals if sentiment shifts or growth expectations moderate. There is an ongoing debate about whether this growth we have seen resembles past bubbles, particularly the late 1990s dot-com cycle. There are similarities in terms of price momentum and investor enthusiasm, but there is also a key difference. Today's leaders are generating substantial earnings. For example, Micron is expected to deliver tens of billions in operating profit this year, and Samsung recently reported an 8-fold increase in quarterly operating income. This is not purely speculative capital chasing unproven business models. Even so, valuation expansion has been aggressive, and expectations are now very high. That creates a narrower margin for error. If demand for AI infrastructure slows, or if supply catches up faster than expected, these stocks could reprice quickly. Moving on to geopolitics. Peace talks seem to have stalled between the US and Iran, and we will have to keep a close eye on updates as the narrative continues to unfold. Later this week, President Trump is planning to travel to Beijing, China for a 2-day summit that covers multiple high-stakes issues. Another major headline this week is that the Federal Reserve leadership is about to shift. Kevin Warsh, President Trump's nominee for the Federal Reserve chair, is expected to be confirmed later this week, replacing Jerome Powell. With the next Fed meeting scheduled for June, markets will be closely watching for any signaling changes around rates and inflation tolerance. A transition at the Fed, combined with elevated geopolitical tensions, adds another layer of uncertainty to the markets. The near-term outlook comes down to 2 factors. First, whether earnings can continue to justify current valuations, and second, how geopolitical developments will influence global trade, supply chains, and investor sentiment. Up to this point, markets have been willing to look through macro risk so far, but that may be tested in the weeks ahead. Thank you for listening. Hope you have a great week.